Well, I welcome everybody to our April 22nd video briefing. I hope you're all well, healthy, happy, and safe. It sounds like some of you can go out and play later if you want to, based on what I'm reading in various places. Um, but anyway, uh, thank you for coming along. We're going to run through the latest market developments here today and then have a Q&A session. But as always, I'm joined by Sharon Head in our AP Wealth World Headquarters, and also we've got Clayton Kwame on the call today as well. So Sharon, I will let you talk about any administrative things and asking questions.
Okay. Well, I think we'll just do what we've been doing. If you'll locate your chat bar or the toolbar and the chat box, and then you can put questions in. And I see we already have one. So you can send them privately or you can send them to everyone in the group. So thank you. And we will take those toward the end, I think.
Thank you, Sharon. Okay, let me go ahead and pull up the PowerPoint here because y'all don't want to see me. So we just want to talk about the latest news from the financial markets. And before we do that, as always, there's a recording of our briefing today. If you would like a recording of it, just let us know. It'll be posted on our website. It'll also be at various social media points. If you know someone who might benefit from it, please forward it to them. We're happy to give out good information. And so let's get started. I'm going to skip our usual stuff. So what's happening in the markets? Well, of course, the big one is energy. What's going on with oil? We've seen in lots of publications and on the web that oil has gone to zero and actually gone negative. Well, this is a little bit of truth in advertising from the press, because the futures contracts for May went to zero and below zero. So let's just talk really briefly and not too technically about what a futures contract is. A futures contract is a promise to buy something at a specified price, and you get that contract by paying money. So by way of example, I was thinking about this. Oil and energy prices move up and down very rapidly. So a contract locks in a price for oil. And let's take milk at the supermarket. Let's say you walked into the supermarket and one day milk was $1 for a half gallon and the next day it was $3. If you knew you were going to drink a lot of milk, you might pay a dime to make sure you could buy milk at $1 a month from now, or 2 months from now, or 3 months from now. So that's what a futures contract is. So as we look further out into the June contracts, into the July contracts, those are not zero. But what happened was, as you all probably know, we're running out of space to store oil. So all those folks who had bought a contract to buy oil at a specified price were going to way overpay for it, and they didn't want it. And so prices for the oil as well as the contract started dropping precipitously. So what's going on, and just a couple of things about oil, and it'll tell you why there's little demand for oil right now. As you look on the screen, you see 40% of our oil use is for cars and trucks. Now there's some trucks on the road that are hauling things that we need, but there are very little cars on the road, and so demand has dropped tremendously. Also, 30% of oil use is from industry, power, and buildings. So for office buildings and any kind of retail buildings, those are, for all intents and purposes, have been largely shuttered. Not all, but a lot of them. Power is limited. And then, of course, industry. A lot of folks are not working in industry right now. So that's one of the reasons why energy has decreased so much and demand has decreased so much. And until we get some clarity on when we can go back to work, when we have to stop social distancing, when we return to normal, whatever that is, I think oil and energy are going to struggle for quite a while. And we had a couple of questions on energy and oil and where it was going in the last couple of briefings. I think it's going to continue to struggle for quite a while. I don't think there's any money to be made in energy in the short term. The next thing I want to touch on are bonds and fixed income. We touched on this most of the briefings, that 10-year Treasury rates, and just as a reminder, the 10-year Treasury is a U.S. Treasury note that will pay off in 10 years, and there's no risk in that bond, because if the U.S. federal government defaults on the bond, all bets are off anyway. But now, as of close today, that bond was paying 0.625% interest, so less than 1% interest. And so why do these remain so low? Well, one of the reasons we've talked about previously is because there's a flight to quality out of stocks and into safe havens like a U.S. Treasury bond, but also there's no competition. And we'll talk about what's happening in the equity markets. With the uncertainty that's going on, people want to have a certain return, even if it's only $6.25 on a $1,000 U.S. bond. They're willing to accept that currently. So the competition is very, very, very limited. This is a question we get a lot. Are we done? And we've referenced uncertainty before, and uncertainty has not gone away. So from a market volatility and perhaps market downturn, we are not done. Uncertainty as to when we'll get back to normal, uncertainty as to testing, uncertainty as to how this is going to affect the state of Georgia and the state of South Carolina, since they're loosening up, some of the first states to loosen up restrictions. But also there was a article today on some of Health and Human Services saying they're concerned that there could be another wave in the wintertime that's as bad or worse than what we've gone through so far. I don't know. I'm not sure they know. And so that's where the uncertainty comes from. Again, when will the restrictions be lifted? Well, we're starting to see some now, but I think that's a great experiment. And certainly the financial markets didn't react positively today, because Georgia and South Carolina are going to lift restrictions in a couple of days. How long does social distancing continue? You know, as our 6 feet, or we don't go to work, or we work from home, or we do these Zoom conferences rather than having them in person. And of course, how does all the above affect shopping and restaurants and everything else, as we see and we hear more and more stories about businesses being affected by this? Uncertainty rules the day. One of the things that I read about the other day is how are retailers going to get rid of inventory that has not been sold? They have a couple of options. They can hold it till next year. They can try to liquidate it. And my girls at home say there's great sales right now on clothes. And I said, well, we don't have any money to buy it, so let's lay off. But they're trying to figure out what to do with inventory for a couple of reasons. One, they want to make some money on the inventory. But two, it costs them money to store that inventory, which eats further into the profits that most retailers don't have. So also in the are we done category, how long will our government keep pumping cash into the economies, and what are the long-term effects? So today or late yesterday, another $2 trillion was appropriated for liquidity, pumping liquidity into the market. So that's $4 trillion in the last 3 weeks. As I think about that, and it had bipartisan support, it strikes me two ways. One, we've got Democrats and Republicans for the most part coming together, but they are obviously spooked by what's happening, because $4 trillion is a lot of money, and at some point that's going to need to be paid back. Of course, their thought process is the economy is going to regenerate at some point, taxes are going to go up, we're going to be able to recoup that and repay it. But again, there's uncertainty there as to when that will happen, or the results of that, because we're in a situation that we haven't been in before. So a couple of other items, as we talked about previously, also, we're in the midst of earnings season for the first quarter, which would be January, February, and March. And as you know, this earnings season that's being reported on right now has 2 good months and 1 really bad month. January and February were very poor, were very good, and March, of course, was very poor. And typically when companies report earnings, they will issue forward guidance. So they'll issue their earnings and have a conference call and talk about what happened during the quarter, what made it good, what made it bad. And then towards the end of the call, they'll say, here's what we see happening in the future. Well, uncertainty is so bad now, and many analysts are flying blind because a record number of companies are not even issuing any forward guidance. They don't know what's going to happen. They don't know how many folks are going to be working for them. Again, we've never been here before in a pandemic in a very long time, but certainly not in the modern economy. So it's really, really a little bit unsettling, but very interesting, because if anybody tells you they know what's going to happen, I don't think they do. So what's going to happen in the next quarter, which would be April, May, and June? We'll have a full quarter of this pandemic and how it affects our economy and how it affects our companies and profits. I think earnings for the next quarter will be much worse. Of course, we're going to have 3 months that are probably going to be very bad. In about late May, early June, the markets will begin to attempt to digest how bad the earnings will be. Now, they're going to do that along the way, but as I just mentioned, a lot of companies aren't giving earnings guidance. So I think we're going to see an awful lot of volatility between now and when earnings report, because little pieces, as I mentioned up here, little pieces of bad news or good news are going to drive the markets, whether it be something to do with the virus, whether it be jobs reports, whether it be what's happening in other countries and currency. There's going to be a lot of volatility. And to the point we made earlier, we're not done with this market reckoning in this severe economic downturn, because we don't know what's going to happen. As we said, there'll be more down days. And as I thought about preparing for what's happening in the markets, I thought about 08 and 09, and that's about 10 years ago. And you look at a couple of graphs and you see, well, we've had a downturn before that of Y2K and the great NASDAQ implosion 10 years before that. So do we plan for a severe downturn every 10 years? If so, how does our approach change? We don't plan for a downturn every 10 years because we don't know what's going to happen. And as always, what we're really trying to do, and you as investors and studiers of the market, we're really trying to manage risk. We're trying to manage how much risk you want to take. And it's pertinent right now, because if you're willing to take a lot of risk right now and dive into the market feet first, in the long run, you're probably going to be okay. But in the short run, you might be scared to death when we have these volatile days. So as we've said before, and we'll talk briefly here in a second about it, if you were in the right place, if you had the right amount of risk coming into this downturn, then you shouldn't make material changes to your asset allocation and to your portfolio. It's going to deliver what you want it to deliver over the long run. It's going to be some crazy times over the next few months, but in the long run, your portfolio will perform as you hope it will. We just don't know when. So switching back to the earnings and what's coming up. So earnings report for April, May, and June will come sometime in July, and that'll give us a good idea of just how bad this is. We're beginning to see some sprouts of leveling off of the virus, but how the market reacts and how companies do and how we perform as a country and as a world to these sort of things will give us a great idea. So we're going to take questions in a minute. We just wanted to give a short briefing on what we're seeing, but I wanted to remind you of the strategies we talked about a couple of weeks ago. The first one is tax loss harvesting. We've been doing that in some taxable accounts, and that's going ahead and taking losses in positions and then buying similar positions, but booking those losses so you can take them on your tax return. Then also long-term rebalancing of your portfolio. If your stock allocation is supposed to be 40% and now it's down to 32%, then at some point you need to rebalance and go buy stocks and sell off some of the other areas. And then also Roth conversions. We've talked about those before. I won't get into the technical aspects about that, but you can move money from an IRA or retirement plan to a Roth account and escape some tax. So with that brief overview, we'll take some questions. And Sharon, I couldn't hear you earlier.
You couldn't? Can you hear me now?
I can hear you through the door in the office.
Oh,
Maybe
okay.
it's me, but let's
Now
see.
hold
Hang
on.
on just a second.
Let me see.
Let
My
me see if
mute
you're
is not on.
Bear with us, y'all.
Okay. Can you hear now? No. Okay.
Oh, you know what? That was me.
Okay.
There we go. There's
All
a
right.
volume control on my computer. And when you use it correctly,
Okay.
it works.
All right. Well, we do have a question.
Okay.
It's how do you hedge inflation and disinflation both? Inflation in the US is scary with us printing money. Any thoughts?
Okay. How do you hedge inflation? Well, one of the best things to hedge inflation with would be commodities, a la oil, gold, things like that. But as we've talked about before, um, at this point, inflation is not an issue. Um, Disinflation would be the opposite, which would be deflation. So you'd want assets that are going to perform well in the long term, but are going to be subject to market changes. So basically, investing just as you would the opposite of buying commodities like oil and gas. And I see I've got one here and that I'll read out. U.S. Treasuries, question mark. The Fed is buying, correct? Question mark. Are they buying at all? How is this not just us printing money? The risk-free rate seems to be a function of that government can print money, albeit could it be worthless? Yes, the Fed could be printing money. The Fed could be buying securities, which is basically the same thing. But if our currency becomes untethered, then the least of our problems is what's going on in the market because we are still the haven for safety. So that's certainly a risk. I'd say it was probably more of a risk in 08 and 09 than it was now, but we borrowed more and more quickly than we did in 08 and 09. Clayton, if you want to adjust that too, I'm going to unmute you. Or Tom, if you're on the call, climb in.
Good explanation, Gene.
Okay. Now, I'll remind y'all too, you can submit your questions via Zoom by the chat box that Sharon referenced, but also don't be scared to unmute yourself and just ask a question. We can have a conversation here. Despite my technical challenges, we're starting to get better at this. And I can hear everybody now. So don't be afraid to.
Right.
unmute.
And if someone, I did have someone ask about the muting and unmuting. If you would like to verbally ask your question, just send me a note in the chat box and I'll unmute your microphone and we'll call on you at the next time. So I'm not sure. I'm not sure if, I'm not sure if this person wanted their microphone unmuted. So.
Sharon, any other questions you see popping up?
Don't have anything else.
Okay.
Right now. Yeah.
Clayton, anything you wanted to add?
No, we could maybe make the admin note if we wanted to that we talked about today, which is with just our take on meetings and different things moving forward. If you've got a meeting or a call scheduled with us, we're really flexible. So if you guys feel comfortable to come in the office and you want to meet face to face, we are more than happy to sit down and do that. If you are most comfortable meeting via Zoom, as we're doing here, that's also works well. So in our confirmation emails for meetings, we'll be posing that question to you. So just asking which one you want to do, and just let us know, and we'll accommodate whatever's most or whatever's the easiest for you guys.
I see a question and a comment. I'll say the comment quickly here. One of the questions I responded to, I agree with you. Tell everyone to buy guns and butter. All right, what is the best industry to invest in going forward? That's a question I got. Very good question. It's a target-rich environment. I had a question from a client last week. They wanted to buy Boeing. Boeing's a great company. Boeing has certainly been beat down, but they were beat down even more because of the MAX 737 issue previous to this, or 787, whatever it's called. But when you buy a specific stock in a downturn like this, you're effectively betting that that stock is going to improve faster than a basket of stocks as a whole. And that may be the case. But if you recall, when I was talking earlier, we're really trying to manage risk here. So if we're trying to manage risk, if it's a fun stock, pick it up, buy it. That's different than money that's important to you. But if you're trying to pick one stock rather than a basket of stocks, you better be really sure, okay? And so the other thing I'll mention is if we're going to buy an individual stock in a portfolio, it's going to be at least 3% of the portfolio value. So it's typically going to be pretty meaningful. So great question. There's lots of them. The ones that are beat down the most, we just talked about energy. I think that's got a long road to hoe before it comes back. Consumer staples, consumer cyclicals, airlines, but besides the toilet paper folks, like Kimberly Clark reported very good earnings, but there's a whole lot of other folks that are suffering, as y'all know, and will likely continue to suffer. But I did hear today, and this is on the internet, so take it for what it's worth, that college football season is probably a go. It may be delayed, but that ought to be a little ray of sunshine for some of us. Sharon, anything on your end?
I don't have anything else.
Okay. Well, we will then begin to wrap up. What about Aquinas football? It's a good question. I don't know, Keith. But again, thank you for your confidence. Thank you for tuning in today. Please give us feedback on what we're doing right and what I'm doing wrong, besides not hitting the unmute button on my computer. This has been very good for us, but your input on what you want to hear and asking questions really tunes us into what's going on in your world. So please keep in touch with us, take care of others that need to be taken care of, and go surprise somebody that you haven't talked to in a while. And take care of yourselves. All right. Bye-bye.
Thanks, guys.
Thanks.